So, what is the difference between a tax rate cut and a tax base cut? Okay, these are two completely different things. Um, just because you see something, let's say that the government lowers tax rates, okay, that doesn't necessarily mean that you got a tax cut when you take a look at the whole picture. And that's because of the difference between your tax rate and your tax base, okay? So your tax rate is what you look up, and you can look up tax brackets, and it'll be the rate for your level of income. So 20, 25%, 10%, 12%, 15%. That's something pretty much everybody's pretty familiar with. What everybody's not so familiar with is the tax base, okay? Your tax base has to deal with your amount of taxable income, which is influenced and affected by certain deductions that you are allowed to take. So what happens is for instance, we'll talk about the 2018 Tax Cuts and Jobs Act that was passed and made effective starting in the year 2018 to, I believe, the year 2025. What happened with that new tax law is there were a lot of tax rate cuts. There were a lot of them. All across the board, all income levels saw a tax rate cut. Okay? And then what also happened that's a lot less talked about because it's a lot less obvious is that there was also a tax base change. For instance, let's say that you have a dependent on your tax return, and there was this thing called a personal exemption. All right, there's a standard deduction. You might have heard of that, and then attached to you, the person filing the tax return, and any dependents that you have on the tax return, each of those people got a personal exemption. So what the hell's that? It's basically just an added deduction that you lower your income minus deductions gets you to your taxable income. So it used to be, before the tax law change, it used to be you have your income minus your standard deduction minus your personal exemptions can get you to your taxable income. Now they took away the personal exemptions. There are no more personal exemptions. So now it's just your income minus your standard deduction gets you to your taxable income. And it could be your standard deduction or itemized deductions, but we won't get into that. Anyways, that has to deal with the tax base. Your tax base is the amount of income that you're actually taxed on, because nobody is taxed on 100% of their income. There's always something in the middle. Income minus deductions gets you to your taxable income, and that's them playing with the tax base. So just because you see the tax rates go down, they can also change that tax base in which it might not even lead to a tax cut for you. Okay? For instance, how I brought up the personal exemptions, they took those away. They knew that taking away the personal exemptions would increase your tax base. So you're going to pay more taxes on your income because your tax base is higher. So what then they tried to do to counteract that was they tried to increase the standard deduction. Okay? So anyways, that is some ways that they play with the tax code, they change the laws. There's tax rates and then there's tax base. So just because you're out there and you see there's a tax rate cut, that does not necessarily mean that you are going to get a tax cut, because they could have changed something with your tax base that leads you to paying a lower percentage of your income on a higher taxable income because you have less to deduct. Does that make sense? For instance, one example was how I mentioned they took away the personal exemptions. Another thing that changed was businesses can no longer deduct entertainment expenses. Okay, the expense used to be meals and entertainment. Now it's only meals. Okay, used to M&E, right? M&E is an expense, a tax write-off. Now it's just M. It's only meals. Entertainment expenses are no longer deductible. So that was another way in which they were playing with that tax base, and they increased the tax base, okay? Because there's an expense that everybody was incurring, writing off on their taxes, total income minus expense, taxable income. They took away that expense, raised your taxable income. So that's kind of the difference between a tax rate cut and a tax base cut. Just because you see tax rates go down doesn't necessarily mean that you got a tax cut, because they can mess with your tax base.